Good afternoon everyone, and welcome to my August mid-month property report, which I'm basically going to be highlighting a little bit of reflection from what we've seen in the first 2 weeks of August, and putting some insight and analysis behind the statistics, and at the end of this broadcast try and give you sort of like an idea of what my thoughts are as to how the market's going to sort of pan out for the next few months and to the year end. So let's start off by talking about first and foremost July, because if you've watched the news this morning, certainly it was on Sky News, that they broadcast that from Rightmove's press release of the latest property figures that they compile each month. July was the UK's busiest sales month for the last 10 years, which is absolutely outstanding. 37 billion was what the sales amounted to throughout the whole of July, which is an absolutely astonishing figure. And you'll recall from my report last few weeks ago that we recorded our busiest ever month here in my 26 years of trading here. So that certainly underlines that. As far as house prices are concerned, they've sort of like generally stood up pretty well, and most areas have sort of recorded sort of minimal sort of growth. But the interesting point was that London had pulled the national asking price figure down, falling by around 2%, and that's between the 5th of August and the 12th. Sorry, that's for July. Beg your pardon, I'm getting ahead of myself here. So it's interesting to see why that is. I'll come to that in just a bit. But between the 5th of August and the 12th of August, that's basically that 7-day period, sales rose by 60% compared to the same period of last year. So that's a really interesting statistic as well. Again, I'll shine a bit more light on that when we start to go into August. But just going back to that London point, house prices dropping at 2%. Apparently, according to the Rightmove index, is that many people are expressing the desire to sort of move away from London and its commuter belt, and that would kind of like make you see, sort of like underlines the talk that people are perhaps moving further out into the countryside and to further away from London, with home working now taking a really big role. And people, companies don't necessarily need people to work and travel into the capital when they can do work quite feasibly at home with obviously all the latest technology that is around us and currently exists. So that's quite an interesting statistic, and I'll certainly be keeping a close eye on that over the next few months or so. So let's come on to this how the first 2 weeks of August have panned out. Very interesting, actually. We've certainly seen that the momentum has carried on, fair to say, from what we saw in July. Applicant inquiries, interestingly enough, are not too dissimilar from what we actually saw last year. We noticed that applicant registrations for the first week of August were 28% up, and for the second week they were 43% up year on year. However, there's a little bit of a trend here. We saw applicant registrations for the first 2 weeks of August 16% down, and we did see a drop on week 1 to week 2, down 6% this year. Now, that's the reason why I would say that is because obviously last week we had 6 days of 30 degrees plus temperatures. I for one wouldn't want to be sort of like probably travelling around viewing properties, so that would probably answer that reason. And as far as viewings are concerned, 16% up from our own figures. These are now 16% up that we noticed from viewings for the first 2 weeks of August last year compared to this year. which is encouraging because obviously if you know, people are going out to, if they're going out to view properties, then they're obviously you know, looking to make offers and buy. So bringing us onto the sales agreed statistics now, over our 5 platform settings, which is NR 17 1 and 2, NR 16 1 and 2, and IP 24. There's a total of 63 sales agreed for the first 16 days of August, and we actually saw an increase. That increase based on 2019, that's up 103%. So that is pretty impressive. Our own figures, we were up 125% on August last year, which again is awesome work, and I'll shine a bit of light as to why that's actually happened as well, because obviously we've also seen that on our instruction figures as well. Coming on to instructions, again, we've seen, you know, the instructions compared to the first 2 weeks of August last year to this year, 29% up, with 71 new instructions coming to market across the 5 postcode settings. Ourselves, we were 50% up on what we were doing in 2019 for the first 2 weeks of August, which is extremely encouraging. And stock levels, we've seen stock levels for the first 2 weeks of August 10% down on what they were in 2019, but you're going to expect that because obviously with properties selling the rate they are at the moment, but it's not too bad actually. I perhaps expected that figure to be a little bit higher. I didn't think it would be. I thought 10% was pretty good, because obviously there has been a huge demand for property at the moment, with sales being agreed, and but it's good to see that stock levels are sort of similar, and it obviously it underlines that, you know, there's a lot more stock coming to market. And I think why we've done particularly well over the last sort of 2 weeks, and even the July, going back to June and May, was you know, from when we came back from lockdown. I think last year, as a company, we were very much in a transition period, and we had some, you know, new staff, and we were implementing lots of new sort of training ideas and methodology, putting new strategies into place. And I think a year down the road, we're certainly seeing the benefits of that with the sort of numbers that we've of sales that we're currently agreeing at the moment, which is hugely encouraging. So that's where, you know, as far as I see things, you know, from where we've come from, you know, this year compared to last year. I think that the last week we did notice, you know, certainly the phones certainly weren't as busy as what they were for the first week of August, but like I said before, talked about the temperatures, and I think that probably had a lot to do with it. But I think that the outlook at the moment, I think, it's good. Okay, but we must not forget, you know, that there's 3 major contributory factors, in my opinion, that are going to affect the market over the next sort of 4.5 months or so to the year end. First and foremost, formally announced last week, I did a little broadcast on this last week about the recession. Yes, we're in the recession. We know we're in the recession. And I think that is going to have some sort of bearing, obviously, on the market, because as we know, at the end of October, the furlough scheme comes to an end. I think, you know, I think the market's prime concern for its future is basically around jobs. And obviously, you know, we're seeing the jobs market, you know, people obviously being made redundant, being laid off, so unemployment is rising, and obviously that's a concern. So obviously that is a concern for the property market, and obviously the COVID situation. I mean, that certainly hasn't gone away. If anything,